Hey everyone, me Kevin here. A lot of questions coming up about why the heck all of a sudden the cryptocurrency mining companies are selling off. Take a look at this. You've got HUD 8 mining that's down 11.8%. You've got Hive that's down 6.32%. Marathon Digital at the moment is down 4.67%. What's happening at the miners, and what do you need to know about what's going on? Okay, so here's the straight scoop. This fall didn't come particularly because there's any kind of madness in Bitcoin selling off. In fact, if you jump over here, yeah, Bitcoin's been rotating down a little bit, but honestly, we've been sitting in this channel of around 56.6 to 58,000 pretty regularly and consistently here over the past few weeks, and we haven't seen HUD 8 all of a sudden drop down to like $10 or some of the other miners drop out. Instead, what happened is HUD 8 released their November production update, and this raised some eyebrows. The production update indicated that 265 Bitcoin were mined over at HUD 8. Now, in October, they mined 343 Bitcoin. In September, they mined 303 Bitcoin. That is a nice increasing trend. In fact, 343 divided by 305 is an increase of mining by about 12.5%. However, if you just mine 265 divided by what we mined in October, you're down about 22.7% in production. And this is making folks question, wait a minute, what's happening at the cryptocurrency miners? Now, I particularly love HUD 8. I don't invest in HUD 8. However, I've interviewed the executives from HUD 8 twice on the channel, so you can check that out by just typing into YouTube, Meet Kevin HUD 8 Mining. But folks, here's what their press release said, and then here's some of my thoughts about this, and then I want to talk a little bit about valuation for crypto miners and why sometimes they're susceptible to these larger kind of drops, which is pretty important to know and understand if you're investing in the miners. And I understand people sometimes enjoy investing in the miners because it's hard, for example, to hold Bitcoin in a Roth, if at all possible. I mean, maybe you could use like the Grayscale Bitcoin Trust. But then again, even MicroStrategy is selling off a bit today, down about 3.6%, and MicroStrategy isn't a miner. He's just HODL, right? So really what appears to be a problem here in this last month is that HUD 8 has been installing new servers. They've installed 600 new servers, which carry 2,400 NVIDIA cryptocurrency mining processors, or CMPs. Now, when I think of installing new product, sometimes I think about the labor that goes into making room for the new product, potentially shutting down power to certain areas while you're installing new product. And I wonder if potentially we're seeing a little bit of sort of a power down in production as they're getting ready to ramp up and actually have more production in the future. So this could just be sort of a blip in the radar here. But it's a little bit complicated to understand their press release, and I wish HUD 8 would provide a little bit more clarity, because they mentioned here they received and installed 600 servers containing 2,400 NVIDIA cryptocurrency mining processors. But then in the next line, they say they've deployed approximately 25% of their total server fleet. It's deployed and earning. So I'm wondering, do they mean of all of the server fleet that they've ordered, they've only got 25% running? Or of the NVIDIA, they've only got 25% running? And does this mean we're still going to have a few hiccupy months over the next few months here? I've gone ahead and sent over a tweet to the folks over at HUD 8, so I'm kind of curious to see what they say. But I do think that lack of clarity is leading to some confusion in the market, because you already pay for quite a premium for these mining companies. Consider this. HUD 8, well, let me do the math for you really quickly using Hive as an example, and I'll show you some of the other ones. Hive Digital, just as an example, hodls 1,350 Bitcoin. With Bitcoin at a price of about $56,700, that's worth about $49.5 million. But they have a market cap of $1.68 billion, which is about 32x that. So you're paying a substantial premium to invest in a mining company over somebody that's solely hodling Bitcoin. And the reason for that is you're paying for the technology they have. You're paying for the fact that you expect their efficiency to go up, that you expect them to mine more crypto, not less. And that's why this production update is a little unnerving, because it's kind of like, hey, if you're adding servers, why is it affecting your old servers? Why is the production of your old servers going down? What's changing? Why? And then that always begs the question from investors, because remember, We're paying a premium for that technology. You're paying a premium for those mining rigs because you believe they're going to produce more and more over time, not less. Now, we do know that over time, mining rigs become less effective, but you're paying a premium, right? With Hive, you're paying a 32x premium over what they hodl in Bitcoin for the fact that they are a mining company. With Marathon, you're paying 10.6 times what they hodl to market cap. With Bitfarms, you're paying 6.7 times, and with Hut 8, you're paying about 6.4 times. With MicroStrategy, because they don't mine, sometimes you're paying a discount. Right now, you're paying about 1.1 times for the Bitcoin that they hold. And the easy way to calculate this is simply look up what the price of Bitcoin is, how much MicroStrategy hodls. Here, we'll do it together. MicroStrategy Bitcoin held. We'll do that quickly, and then we'll divide it by the market cap. So the latest result as of September 13th, I'm not sure if that's the latest information, but as of September 13th, it looks like they hold about 114,000 Bitcoin. If we multiply that by about 56,700, that gets us to a market cap of about $6.4 billion. Just quick math here. Or I shouldn't say market cap, market value of 6.4 billion Bitcoin. And if we do MicroStrategy stock, we could see right here, look at that. Your market cap is 7 billion. So you could see that slight premium that you're paying. Actually, right now, because Bitcoin's fallen a little bit, you're probably paying divided by let's quickly see what it was, 6.46. So 7.02 divided by 6.46, you're paying about, it's still about 1.1 x for the amount of Bitcoin that they have. And again, they're not a miner. So that extra little bit is sort of paying for Michael Saylor's strategic decisions when he decides to maybe raise capital with the stock and invest more in Bitcoin. That's the sort of premium you're paying at MicroStrategy. It's very, very small because they don't actually mine, and the business isn't really being valued at anything other than the fact that they actually hodl crypto. And so this, I think, is why you're seeing the largest sell-off amongst the miners today, because why if you're adding servers are all of a sudden monthly production quotas falling by 22.7%. I mean, it makes sense if maybe you had a little note like, by the way, we had to take our entire facility offline for a week to install these new rigs, but they didn't say that. And that, I think, is what's concerning the market a little bit. Like, wait a minute, we paid a big premium for those previous mining machines. Now, I'm glad you're installing new ones that are hopefully more efficient, but now the value of the older technology you had is worth less, and I think that's why we're seeing a little bit of a sell down in the mining companies today. I would, before potentially buying the dip here, try to wait and see what Hut 8 responds with. So follow me on Twitter at RealMeatKevin. You'll see a tweet before this video is posted. You could like it, you could retweet it, and hopefully they respond soon. You're specifically looking probably for a reply from Jamie Leverton or someone else over at Hut 8. All right, folks, thanks so much for watching, and we'll see you in the next one. Thanks again. Bye.